Dr. Chang is a urologist. He's employed, moving to a new opportunity. I don't know if it's a new state, a new employer, or a potential locums, as he mentions, but it looks like his current contract has a claims-based malpractice insurance policy, and a tail is going to need to be paid. The expected cost is $170,000, which for anybody is a lot of money, even a highly compensated urologist. So what are the options for Dr. Chang? Well, I don't know what the contract looks like. So if he does have to buy tail insurance in his contract, he could do a few things. One, he could negotiate out of his current contract. If they're requiring a 90-day notice to terminate, he could offer a year or 6 months, depending on how long it might take to recruit a replacement. He could participate in the recruitment process, maybe help interview the candidate and give the organization a clean bill of health, of course, if he thinks it does have a clean bill of health and he's just transitioning for other reasons. So he could negotiate out of his current contract. That's one option. The second option is he never cancels the policy. If he's staying in the state, or the malpractice insurance carrier that currently has his policy is he could just transfer the policy. So maybe he's going to a new state and they offer insurance in that state. Maybe that's not possible. I don't know what state he's in, nor do I know the policy details. But he could say the employer stops paying the malpractice premium. He just starts to pay it on his own if he's going to do locums, or his next employer picks it up if he's going to take an employed position. So the policy never ends. There's no lapse in coverage, so there's no tail that needs to be bought. Now, if he works for the next employer for 3 years and he leaves that organization, or he does locums and he takes a contract somewhere else, he's got to terminate the policy. A tail is going to have to be purchased at some point. You can't convert the policy, is my assumption. So the other opportunity, so if he can't negotiate out of the contract to have them cover tail, if he could not have them cancel the policy, he just transfers the policy, and who pays, it never needs to be tailed out because it hasn't been canceled. The other thing that he could do, let's just say that the next organization is offering him $500,000 for a salary. He could just offer to take, say, $300,000 for 2 years, or for 1 year maybe, and they would pay it pre-tax. So he would never have to worry about the taxes on the $500,000. He would just pay taxes on $300,000. They would take care of the tail coverage. His salary would go to $500,000 in the following year. That may or may not be something that Dr. Chang would be interested in, but that would be an option as well. Talk to a CPA, of course, a tax professional, on the options there as far as transferring dollars, and of course the organization for assessing fair market value. But I do believe they could pay him less than fair market value, but they would probably roll that $170,000 tail payment into their calculation on what would be fair for the market. So those are 3 options for Dr. Chang. He could always have us review the contract, and we can see if there's other ways that we could provide options and value as well. But on the surface, those are 3 options that Dr. Chang or any physician would have if they're looking at buying tail insurance and they don't want to. So we can't go back and change what the contract says. All we can do is hopefully plan for the future. If anybody out there has questions on malpractice insurance or anything else that are your listeners, of course, have them give us a call or reach out to you, and we can answer more questions like this. We love doing this at Contract Diagnostics. Thanks for all you do, and we'll be here to help anybody else that needs our value, I guess, as you look at contracts, malpractice insurance, compensation structures. That's what we do every day, and we'll be here to help.